welcome out to your currency recap for February 14th. Corey here with you. As always, a quick reminder to make sure that you follow your trading plan, and let's take a look at markets. So as we look at the performance today, pretty quiet except crypto, which was stronger. Everything else was basically flat on the day. But the more interesting piece of news came in the daily news. First, we got the CPI report. It came in 0.5% higher month over month number, and then the annual number came in at 6.4%, which was a little bit higher than expected, somewhat in line, but a little bit higher than expected. Where it really got interesting was in the inflation breakdown. As you look at the breakdown of inflation, look at egg prices, up 70% in January. And this is where owning some chickens, I guess, and getting those eggs might come in handy. But ultimately, you can see on the deflation side, we had television prices, autos, some things going down in price, but there was some inflation. And the question and the debate going through the markets is whether or not we're going to see higher for longer. Basically, the Fed keeping interest rates up for a longer extended period of time than the markets realize because they keep fighting this inflation. So a higher than expected number makes it more likely, not less likely, more likely that the Fed is going to be hawkish and need to keep rates up. So again, kind of a quiet day. Now this is a little bit surprising given the volatility that the CPI has brought about for the last few months. CPI reports have brought on average about 1.5% moves in the S&P, and today we didn't do anything like that. Now, if we review where we've been and where we're going, we had a big break of the trend line back here. We had kind of an exhaustion top a couple of Thursdays ago. We highlighted that at the time. Now you've kind of pulled back and you're in this consolidation. It's been my operating thesis that we're in a consolidation, and then we should start to back and fill. So I don't think we're out of the woods. I think there's still more deterioration coming in equities before this is all said and done. If we look at international markets, they broke out a little earlier, and similar exhaustion, consolidation the past couple of weeks. We really haven't gone anywhere in the past couple of weeks, which is interesting given how much anticipation there has been. So it speaks to what an exhaustion really is that we've gone too far too fast. We need to rest, and I have to say, give credit where credit is due. The market is consolidating but not really giving ground, which is actually bullish price action. The fact that it's hanging in there, now that might be true until it's not, right? We might give up that ground here in the not too distant future, because usually what happens in an exhaustion is kind of a rest and then a reversal if it's more of an exhaustion that's, set up for that. And I think it is. We talked about these big ABC style correction that the market's been in. So we've really corrected out of the bear market. And now in the not too distant future, the bear market's probably going to reemerge. Again, giving credit where credit is due, you have to be impressed with Bitcoin and cryptocurrency. They've consolidated but given more ground, yet overall it's a more volatile market and they're hanging in pretty well. Again, I don't expect that to last. Unfortunately for crypto, I do suspect that we're ultimately going to give ground here, but it's been a pretty impressive run. We've talked about that, it's been strong. It's been one of the better areas the past couple of months. So crypto having a nice day today. Currency wise, you really have weakness in the Japanese yen. A little bit more strength in the pound and the Aussie, but I would say flat-ish on the day. As we kind of just dissect and explore each area, the crypto markets, I haven't really trusted the advance. It has exceeded what I would have anticipated. So that always kind of tells you, okay, well, don't short something that's up more than you expected. There's a little market information there, what we call a market tell. When something's acting better than it would have, could have, should have, based on the news or the charts or whatever, it often has a little more to go. So wait for this to really give you a big exhaustion signal or something before betting against it. In crypto land, I highlighted this in the market midweek last Wednesday, that I think the US dollar should have a few weeks, let's say, a few months really, of upside. I think overall we're going to move into this defensive posturing. The Japanese yen's a tough one because it's just flying all over the place on the latest news. Right now, it's the Bank of Japan. It's who's going to head up their policy. Is it going to be Hawk or Dove? And, Swiss franc is certainly defensive. These are an area to focus, but I actually like the risk to reward of US dollar better than anything else. So as far as market outlook, equities are still strong, still performing pretty well overall. And as we look at the data, we've passed the major hurdle this week. Now we get into retail sales, we get into PPI, but none of these are expected to have quite the volatility that the CPI. And the CPI was a dud. The markets were positioning and expecting a pretty volatile event, and it really did not deliver. So take it for what it's worth. That was kind of a dud. Here's the US dollar chart on the daily time frame, and think about this from kind of an Elliott wave perspective. So if you follow Elliott wave, we could say that the market here had its first drop, that's the first wave. The second rally, that's wave 2, right? The third wave is usually the strongest and the longest. So if we put a wave pattern in here, that's your third wave to the downside. Then you have a corrective phase, which is the fourth wave. Again, the 2 and the 4 go opposite to the dominant trend here that had emerged. And then the fifth and final wave. This is how I see it in terms of the US dollar. So is the downtrend finished? Are we out of the long-term bear market? Maybe not, but it certainly went through a 5-wave process. So what are corrective waves? Well, it's an ABC formation. The first rally has taken place, but where does the ABC usually go? So this is A, and then B should be counter to that move, but not exceed the 5th wave. And in fact, usually it'll be like a 38.2% retracement of that advance or some number like that if you follow Fibonacci. But see, we have not pierced, we've not gone to new lows, and notice that the 20 period moving average is kind of down, 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 and now it's curling up underneath. So we had the A, the B. What do I think comes next? We should be in rally mode and make a C wave. So I am fully on board personally with the idea that the US dollar for the next couple of weeks has some potential. Now today was volatile, but ultimately kind of a dud. We sold off on the CPI, we rebounded back up, we kind of finished unchanged. Where does ABC correction usually go? Back to the 4th wave. Where the 4th wave stopped is usually a pretty good target for your ABC. So if you think this makes sense, you're a buyer of US dollars here for the next couple of weeks, thinking we'll trade back up towards 1.218 on this particular chart, or pick your poison as far as charts. So if I come over to, let's just say the Euro USD, which is probably the most widely followed currency chart, you could recreate it. You could say 1, 2, 3, 4, 5, A, this is the B bounce, and then another C sell-off, and see here's the 4th wave where it bottomed. So if you are trading Euro USD to the downside over the next couple of weeks, you're thinking, okay, Euro USD probably goes from 107 down here to 105. A couple hundred pips lower would be kind of the overall target. Or any other US dollar chart you pull up is going to have kind of a similar look and feel to it. Let's pick pound versus the US dollar. Okay? Maybe not perfect, but kind of the same general approach. 1, 2, 3, 4, 5, A, B, and then the C should drop down, and here was the 4th wave. So this C wave down should probably come down here towards about 118. 250, 300-ish pips to the downside is kind of how I see it and how I would anticipate that things should go from here. So in conclusion, I think equities are in a bit of a consolidation. I think the US dollar has bottomed, kind of made its 5-wave big downward turn. It's currently in a corrective phase to the upside. It had the first bounce, the B pullback, and it should go on a C run higher. So you're shorting things versus the US dollar, you're buying the US dollar versus other currencies. That makes sense to me, to my eye, from the charts and from the risk to reward. Make sure that when you're in consolidations that you're really picking your spots, that you're trading carefully, that you're managing that risk. For the rest of this week, we have the top 3 Forex trading mistakes to avoid. We've got the midweek tomorrow. We've got a recap coming out on Thursday, and as always, the weekend trading room. Hope you enjoyed this recap. Have a great rest of your day, and we will see you next time. Goodbye, everyone.